Hello, fellow traders. Volume analysis studies trading activity to validate market moves and trends by measuring market conviction. It answers whether there is genuine participation behind a price trend or if it's weak, low interest moves. Volume is the market's heartbeat. High volume signals strong conviction. Low volume signals caution. We'll explore how volume, the raw count of trades, lets you distinguish real trends from fakeouts. Volume is the market's pulse. Strong volume means many traders are backing the move. Today we're going to get into volume analysis for confirming trends by Pajama Trader. Give this a like and subscribe. Let's get into it. What is volume analysis? Trading volume is the total shares or contracts traded in a period. Volume shown as bars on the price charts. It includes absolute volume, raw data count, and relative volume, RVOL, which compares current volume to historical averages, revealing spikes in participation. Taller bars represent higher trading activity. Every volume bar in the lower section of a trading chart marks trading activity for that interval. High liquidity markets have steady large bars. Sudden spikes means significant events. Relative volume highlights if today's trading is above or below normal. Why volume matters in confirming trends. Volume measures the market energy behind price moves. Uptrends are the strongest when price and volume rise together. Weak if price rises but volume declines. Downtrends confirm falling prices with rising volume, indicating strong selling pressure. Divergences between price and volume warn of trend exhaustion or reversal. A strong trend is like a loaded freight train, hard to stop due to many participants. Price moves lacking volume are like cars on fumes, likely to fail. Always check to see if that volume supports the price action. Trading volume. Trading under resistance on low volume. I wanted to go over an example of volume in the charts and how it matters. So, taking a look at the SPY, you got it up at, it started off its run with very little volume, I'd say, than average. And it ran it all the way up to 684. And then you had this gap down because, if you could see on the bottom, it didn't have enough volume to keep it there. And then you just sort of gapped up and consolidated. And again, low volume couldn't keep it there. But then you had this big volume spike that happened here on the 3rd. Now you got some decent support to hold it up there. But the problem is again, low volume. So it couldn't hold it here, it gapped down. And then you have another volume spike here, keeping it, trying to keep it there. But again, no continuation volume. So as you can see in this pattern, you have these volume spikes, especially during these sell-offs, that drops it down, and then there's no recovery volume. And this is how you can gauge whether the volume is going to be enough to keep that stock or this play at these different levels. So these are something that you probably should keep an eye on in trading. SPY approaches resistance zones 686.60 and 680.90 with declining volume on each attempt, signaling fewer buyers and low conviction. Price reversals after failing to break resistance, confirming the lack of support. Each test of resistance shows declining volume, warning buyers that's losing enthusiasm. Breakouts without volume are rarely sustainable. The reversal confirms the volume-based technical analysis on the chart. Volume patterns to watch. Volume spikes 1/2 to about 3 times the average confirms breakouts and reversals. Declining volume during trends signals exhaustion ahead. Price volume divergences, price up, volume down, or vice versa, reveal skepticism or panic selling. High volume nodes mark support or resistance. Volume gaps represent thin trading areas where prices can quickly jump. Volume spikes often mark major moves. Divergences warn smart money isn't following the price. Volume clusters act as strong support resistance, and price often bounces off of them repeatedly. Popular volume-based indicators. On balance volume, OBV, adds volume up in days and subtract the down days, showing buying and selling pressure trends. VWAP, volume weighted average, provides the average price weighted by volume, a benchmark for institutional trading. Accumulation distribution line gauges professional accumulation and distribution by incorporating closing position relative to daily intraday ranges. On-balance volume reveals where big players in support moves. VWAP guides institutional entry-exit pricing, and the accumulation distribution line helps spot early money flows and shifts. Practical tips for volume analysis. Only confirm breakouts when volume exceeds 150% of the 20-day average to avoid false breakouts. Combine volume with support resistance and other tools like moving averages and RSI, relative volume, RVOL. Above 1 means stronger than average participation. Avoid trading breakouts without strong volume confirmation. Check multiple time frames and always seek fundamental context for volume spikes. Volume in different styles. Scalpers focus on intraday volume spikes, 1 to 15 minute charts for timing. Day traders track volume clusters or point of control zones for liquidity and pivot timing. Swing traders look for weekly volume shells for support resistance and prefer stocks contracts with 500,000 plus in daily volume for liquidity. Volume average adapts to trading style. Scalpers need fast surges. Day traders seek liquidity zones, and swing traders want long-term volume stretches to trade from. Interactive analysis. Using volume charts, learners identify where volume supports or contradiction prices move and spot divergences, volume spikes before reversals, and failed breakout attempts. Practice spotting volume clues in real charts. Identify failed breakouts and volume-driven reversals. This hands-on approach builds pattern recognition and trading confidence. The summary and the takeaways. Volume is critical for validating price moves. Rising volume confirms real trends, while weak volume suggests caution. Use volume with other technical tools and news context. Regular practice reviewing charts hones in institution for distinguishing real moves from fake-outs. The mystery of volume analysis improves trade timing. Mastery of volume analysis improves trade timing and success. Volume is critical for validating price moves. Rising volume confirms real trends, while weak volume suggests caution. Mastery of this volume will help edge your game up 5-10 times X if you're able to spot it in real time. But practice watching volume on charts and find the news behind the moves. And I guarantee you that'll edge up your trading and yield profits in the end. Thanks again for watching.